Morning, everyone. It's the 1st of April. We are Signal Centre, talking ball. Joe Noble, Ian Coleman and Steve O'Hare. Good morning, guys.
Good morning.
Good morning.
No April Fool's pranks this morning?
Not that I know of yet.
They're all in bed, my lot. They don't emerge till about 12 o'clock.
My kids were planning a couple of bits today, waiting to see what they've got up their sleeve. They
got to do it before 12 o'clock, haven't they?
Yeah, that is usually the way it goes, isn't it?
Yeah, I think so.
Okay, so yesterday we had month end.
Yeah.
Hopefully you had a good month overall. It's obviously been a very volatile one for everything, really, all financial assets. We had some trades yesterday. We had a long on the DAX, which finished 0.88R offside. We had a short on the S&P. So Steve won out on the stocks yesterday with a 1.18R win.
Boom.
A nice little streak at the minute, Steve, heading in the right direction. And Ian had a win on Euro New Zealand dollar for 1.39R. So he took the win overall yesterday.
Lovely
Stuff. Already off to a bit of a stinker on stocks this morning by the looks of things.
Yeah, I think it's only going to get worse today, isn't it? I mean, European equities had their worst quarter since 2002, and it's PMI frenzy today, isn't it? Manufacturing figures. And Japan has had its worst manufacturing mumble since 2009. Where's my piece of paper?
Where's your scrap? Where's your fag packet?
So it's shrunk the fastest pace since 2009. Their manufacturing, which is to be expected, but I was quite surprised that markets had such an aggressive sell-off overnight.
So US numbers yesterday, I haven't seen any updates on them actually. So looking at this, 189,000 confirmed cases and 4,000 deaths already. So Trump having to backtrack on his earlier statements of it's just the flu, and now saying that it could be a very dark 2 weeks for people in the US.
Yeah,
he said these numbers peak out. I mean, I still don't think they've got a full lockdown across America.
No.
I think the best way to review it, which a few sites do, is per million. Because obviously the population is fucking massive. So obviously their contagion is going to be a hell of a lot per person. It's going to be a lot higher.
Yeah.
When you actually look at it on the per million, the worst place is Switzerland.
Yeah, I saw that.
Have you seen all these guys going on about 5G? It's actually not a virus. It's all caused by 5G.
I have seen some conspiracies.
And Wuhan has got huge amounts of 5G. And guess where the next biggest place for 5G mass is?
Sheffield.
Switzerland.
Really?
Not Sheffield.
No, I ain't got any up here.
You haven't got
3G up there. Overnight, Ian's gone out with his chainsaw.
Still got an outside bog.
I saw in the US as well, they're all fighting over PPE equipment or PPE stuff, because where obviously they're all governed individually as states, they're not sort of working together collectively as a country, so they're all sort of outbidding each other for the stuff.
Nice.
Right.
Mental, isn't it?
Oh, and the biggest place in America for mass, New York State.
Yeah.
1,500 5G masts they've got,
rather than an actual cause.
I don't know. I'm doing an overlay chart today. I'm going to be very.
It was one of the things.
You're trading that today. Is that your trade of the day?
Yeah. Well, that was one of the things that was mentioned really early on. There was like a conspiracy theory about it being linked to 5G. It was mentioned in the first few weeks, like back in February. It's obviously rearing its head again.
I was made to listen to a recording from a geezer that was a bit of a godder yesterday. I wasn't made to listen to it. Mr. Sullivan's got his conspiracy theories, and he posted it in the chat.
Well, what was the film that they sort of like? What was it? Gentlemen, the spy film, the one with Egan. What's his name? Oh, bloody hell, that's bad. The one where they have in the phone, everything's in the phone, so he gives away the free SIM cards. And
never seen it.
No.
Yeah, you have. I remember it. It's like the The James Bond type film. Anyway, I'll come back to it. I'll do my trade.
Bourne films.
No. It's like a bit of a tongue-in-cheek one.
Oh, okay. Kingsman.
Kingsman. And
Yeah.
the guy gives away free SIM cards, and everyone uses it. He uses it to take control of their brain, and they start killing each other. So
is that what 5G's doing?
Well, you never know now. That's maybe where someone got the idea from. Anyway, shall we?
Okay, so
on?
Has anybody got any trades that they want to take a look at today?
Me.
They had a gun to their head. What would you be trading today?
Even without a gun to the head, I'm going to be doing this. Let me just. I just think the dead cat bounce is dead. So that's it. It's all over for the equities. Still opportunities to get in there. Let me just run through commodities I'm looking at. Oil, a little bit of a bounce yesterday, still in this descending triangle. A break of $20, and I think we go maybe to 15, if not lower. That's aggressive. Copper has broken down overnight. Yesterday we sold it just in front of this resistance level. Had a small winner on it, but overnight it would have hit the target, which is a bit of a shame. But it's broken. I've redrawn this trend line. It's actually nearly 4 points it's touched. So a nice trend line. It's broken below it this morning. Would actually be quite happy to sell this at market, but I'm being a bit reserved on it, trying to sell a rally. Gold, still can't shake off my bullish feeling for gold, but I think my timing might be wrong. So I think there's more potential on the downside, but I'm trying to just capture a little bit of reward in this sort of bullish flag looking thing.
I think that probably is a consolidation for a break.
Yeah. I mean, spike down overnight. Obviously, you got these wide ranges or wide spreads in gold, so this isn't sort of nice. But on the 4-hour chart, even it's a bullish hammer, so positive. And just in the last hour, we've seen a bit of a squeeze higher. Silver, I'm still a little bit negative towards, so that's why I'm a little bit on gold. You run through my APAC again. Ascending triangle bearish. Broken the previous support overnight in the Japan. Broken this trend line. Let's redraw it. Try and get. That's a nice trend line there, and it's broken it, and it's retested it. So that's bearish for China 50, and the Hang Seng. This reverse head and shoulders hasn't played out. It's still. That's the only nice looking one out of the lot. So let me move on. Let me get down to done commodities. Let me get down to the US. Yeah, I think Trump admitting there's potentially 250,000 dead to come in the US wasn't taken nicely in the markets. We had quarter end yesterday. That is a possible. I was watching the Saxo boys who do a great podcast, well worth watching, and that was their theory a couple of days ago that this rally is a quarter end rally, and now it's done. Nasdaq hit 8,000 yesterday, and then a 500-point sell-off. April Fool. Who's the fool? So I'm sticking to S&Ps on this. I'm short of this myself, short from yesterday. So only
we caught
small.
A couple yesterday, didn't we?
Yeah. Let's get a. I mean, there's the support here. This will be a double top formation. This is what I'm. Oh, don't want that line. I want this line. This is a break of 2,457. So say give it a little bit of room, 2,450, and I expect us to very rapidly get back to the lows. You got this downward trending resistance. So this will be a double top formation formed, confirmed. So a little bit of room maybe for a bounce, but I'm going to sell it anyway.
Or is that forming a right shoulder?
What, from a inverse head and shoulders?
Yeah.
Possibly, but it's nowhere near the neckline, so I'm going to completely ignore it until we get the bounce
until
back
it
to
is.
the neckline.
That's the right thing to do, Steve.
That's the practice what you preach.
Yeah.
Not what you fucking want to do. 2506. 2506. I'm going to have a Stop is going to be 25.56. Give it a little bit of room. And my target will be 2200. Now, obviously, not today. Yeah, 6R. I mean,
lovely.
I don't think I'm being unreasonable with that. I just think maybe, you know, the timing might not be today. I just messed it all up.
Thing is, you never know. Any bit, you know, if you don't have these big R targets, then you can't have big R winners, can you? So
no, I
occasionally, you know, they will be rare, but if you have them sitting there and then you win out with a 6 or 7R winner, then happy days, right? Makes a massive difference on your P&L.
Yeah,
indeedy.
So that's it. That's
Cool.
my
Good luck.
thing.
Ian, you got anything, or do you want me
lads.
to go?
You can go, mate, if you like.
Cheers. So I was looking at these Aussie currencies, which I've long been a bear of. I mean, they've had quite a substantial rally from the lows. I'm going to start off with the Aussie basket. This is the daily. As you can see, it's a massive downtrend for most Aussie currencies. The basket that I've constructed, as you can see, there's been a substantial rally from the lows. Looks as though it could be rolling over a bit now and ready to head a bit lower. So when I was looking for opportunities on the individual Aussie currencies, I was looking for classic patterns to form, looking for resistances to work, and then, you know, looking for other signals to potentially get short. But looking at the 4-hour chart today, I've got a break of this triangle pattern. So for me, that would be potentially a cue to get short. I think you could be a bit cuter with your entry and probably look to get in on some sort of retest if it happens around 65.80. But I'm going to jump in now at 65.31, and I'm going to place a stop at 66.40. 66.40, and I'm going to target a move back to the lows, which we saw on the 19th of March. So
it marries up with my trade. You're looking
R.
at the same trade as me, just yours is called Aussie Yen, mine is called S&Ps.
Yeah, basically. You know,
that looks like a bit of a right shoulder, though, doesn't it?
Yeah, it could be, but it hasn't broken yet. So, as you correctly pointed out, we can't be labeling it as such until it has broken.
Exactly.
Yeah, maybe it could come down there somewhere before having a rebound.
No, carry on.
It's all guesswork at the moment on that.
Yeah, well, the lowest it can go is 57.92 because that's as far as your chart goes down.
Yeah, exactly.
Oh, we're in trouble now.
Load of fresh air down there. Okay, that's my trade of the day. Selling Aussie Yen with a stop at 66.40.
Excellent.
Good luck. I want to get long of Swiss, and sterling Swiss looks like probably the best opportunity out of them all. It's pretty sort of mixed bag in most of these currencies at the moment. I think that you could see a higher correction in the dollar index. I think the long-term bias is still to the downside, but a higher correction. So it's all a bit mixed with regards to the dollar majors. Looking for this trend line support on euro dollar. Sterling dollar's more bearish than euro dollar, so I've still got a euro sterling bullish bias, but at lower levels. I don't know if this is the right chart actually. Yeah, around here, which is 61.8% fib. We've also got 87.42 is our bespoke support, so trying to get along down here. But like I said, Swiss is the one that I want to play, and the only pair really that looks like it's got any sort of value with getting short of long of Swiss is sterling Swiss. I like this wedge formation. I'd obviously like to get short a lot higher up, but the target levels down here at 120 112.43. I've, as you know, I look at DMARC a hell of a lot, and there's no 13 count anywhere this morning, so I'm not in at the market, if you see what I mean.
Must be on one chart, surely.
Oh, if I drill it down into 5 minutes, probably, but not in the higher time frame stuff. So I'm going to go short of this bad boy. But like I said, I prefer to be short a lot higher up. 120.90 stop, 112.45 target, which again, I don't think you get today probably. 3.75 R.
Tasty.
Mm.
Okay. News-wise, yesterday we covered a bit at the outset. Anybody got anything else to add?
No, not really. No, they sort of like they're talking about the banks cutting dividends, bonuses to preserve capital. So and that's sort of like
so that's happened, I think, hasn't it?
Yeah, a long-term basis. Again, the Saxon Boys pointed it out this morning. They're looking at the you can look at the market of banks with dividends included, and that's going out to that's collapsed 40-odd% in if you look forward up to December 2021.
Got an article here saying all 5 of the UK's top banks have suspended dividend payments after a request from the Bank of England to preserve cash during the coronavirus crisis.
And bonuses as well, I reckon.
Yeah, they've curbed bonuses. Well, they've asked them to curb bonuses. They'd have been expected to pay out more than 8 billion in the next 2 months in dividends. Wow. So they're going to keep themselves nicely solvent by not doing that. And well,
are they? Let's hope so.
Right. Well, yeah, I mean, a lot of the chat has been surrounding the banks. Obviously, we are reactive in these situations normally. So after the financial crisis, obviously, there was a big push to get the banks to sort themselves out, to strengthen up their balance sheets, which they've all done. And now this next crisis, they're all in pretty good shape. So there's not too much of a worry.
Much better shape than they were, no. But it's just the rest of the economy it's going to impact, isn't it? It's like Indeed, everywhere else.
Definitely.
So, okay, the banks are all right, but no one's got any money because they're all no one's working.
No, that's
great.
A bit of a problem.
Yeah.
So the Fed announced more stimulus measures yesterday. They're going to do swap lines with overseas central banks to help ease funding concerns. There was little or limited US currency support on the back of that. The US consumer confidence declined sharply to 120. That's from 132.6 in March, although that was above the consensus forecast. US equities failed to hold on to their best levels. They all closed much lower from the best levels of the day. Anything else? I mean, Trump's warning about a tougher period ahead. That clearly hasn't helped markets.
In America, they're arguing about how they're going to get money to these, the helicopter money to people.
Yeah.
It's not an easy task, I don't believe.
No. Data-wise today, ADP payrolls.
Could use drones.
Just drop coins from a drone.
Bags of cash.
ADP today, which is the precursor to the non-farm payrolls on Friday, we're forecast to see a drop of 150k from last month's gain of 183,000.
What? Is that all? Surely ADP. Is ADP a precursor to non-farm, isn't it?
Yes.
Why is it only that small number? Forgive my ignorance. Shouldn't it be in the millions?
A drop of 150k from last month's 183k gain. Doesn't seem a lot, does it?
No. Maybe they missed the big figure off.
Maybe. Maybe it's another zero to go on the end of that. Ian suggested that there's going to be some ISM data out today, which is correct. 3 p.m. from the US. Was there any other ISM data that you...
It's all PMI.
Oh, sorry, PMI.
It's all PMI this morning.
US ISM PMI manufacturing data. And then we've got crude inventories at 3:30. Previous reading saw a stockpile of 1.6 million barrels. So I think we're
expecting a lot bigger, aren't they? 4 million, I think they're expecting. Wow. Near enough.
Okay.
3.997 is what they're expecting. So over double.
Christ. Okay. Well, that pretty much wraps everything up. I don't think there's anything else to discuss. Let's wrap it up there. We'll get a couple of webinars out today as well. Not sure what they're going to be on yet.
I'm going to do mine on, going to take maybe one market at a time. I was thinking about starting with gold. I don't want a big rush. Shall I do gold?
Maybe just limit it to commodities then and just talk about gold and silver and oil, maybe.
I don't know. Gold might take up a lot of that time.
Okay.
I'd like to do oil separately, so I might do gold today. Let's see what interest we get.
Yeah. All right. Lovely.
Reanalyzing the markets and gold.
Brilliant. Okay, guys, we'll catch you tomorrow.
Have a good
Cheers.
one.
Cheers.
Cheers, lads.